Market wrap, July 24th, 2020. Friday, stocks have ended the day lower. The Dow closed down 182.44 at 26,469.89, and the S&P 500 closed down 20.03 at 3,215.63. Mortgage bonds ended the day slightly lower. Economic data. New home sales, which measures signed contracts on new homes, were up 13.8% in June, which was much stronger than the 4% gain anticipated. Sales are now up 7% year over year. The median new home price increased 5.8% year over year to $329,300. The majority of the homes that sold were between $200,000 and $300,000. This was a really strong number, and it's impressive to see the year over year gain. We will get the counterpart to this for the existing market next week with pending home sales. According to Freddie Mac, the interest rates rose slightly last week from all-time lows because there are concerns that the pause in economic activity will cause unemployment to remain elevated. And as a result, lenders are including a risk premium. They also mentioned that lenders are overwhelmed by refinances and may be trying to slow down the flow because they are understaffed. Upcoming events. Next week is action-packed, highlighted by appreciation data from the Case-Shiller HPI House Price Index. Pending home sales. The first look at Q2 GDP, I believe the first quarter was down 5. We're expecting, I think, down 35. The Fed's favorite measure of inflation, PCI, which is personal consumption expenditure, I believe, and there's a Fed meeting. The market is expecting, here it is, negative 35% GDP in the second quarter, following negative 5% in the first quarter. Technical picture. Mortgage bonds have been trading sideways over the past 2 weeks, testing overhead resistance a few times, but failing to break through. Every time the 103.219 ceiling was tested, or close to tested, like yesterday, bonds have been pushed lower. Another reason bonds could be losing a little steam is the Fed. They are still buying an enormous amount of mortgage-backed securities, MBS, but they have cut back their purchases, only purchasing $3.4 billion today, as opposed to $4.5 billion previously. Bonds are still in the middle of a wide range, which leaves bonds susceptible to price swings. This has been Market Wrap for July 24th, 2020. Thank you for listening. I'll see you next week.